Hi, and welcome to another daily recap. This is day 75 of, and this is August 9, 2024, and this is EU, and today is Friday, guys. So, I didn't get any trades today. Sorry, actually, I got a trade today, and it was a losing trade, and the session was during New York, and the position I took was shorts, and the market phase was phase C, and the revenue is obviously it's minus 52, the order gain is minus 1. So the entry time frame was M15. Okay. Let me discuss you what was my analysis and was it a valid trade or not. So let's see in this session. So this is a daily outlook. So you can see the string structure is actually bearish. So this is a strong swing high, weak swing low. Price actually liquidated this strong swing high. So it has high chance that the price can come down. So the Thursday candle actually swept the fair value gap. So we can so the daily bias is a bit neutral because price can come down to fill further imbalance or it can use this imbalance to push up. But since the price is coming off from the strong, you know, liquidation of these strong highs, so we can expect a bit more down movement. But still, there is a unmitigated supply here, so price can still push up. So the daily bias is neutral, so we don't know anything about. We can't find any information from the daily. And jumping into the 4-hour chart. This is the 4 hour, so swing structure is bullish, and the internal structure is about to shift bearish, but it just liquidated the internal strong low, so it is not still shifted to bearish. So the internal structure is still bullish, but since it liquidated this fair value gap, we can expect the price to go further up, or at least take out this buy side liquidity, mitigate this POI, and then push down. So I'm expecting price to go a bit further up, but if I jump into the 1 hour chart, the price action will be very clear. Yeah, this is the 4-hour unmitigated POI, but here you can see that it has been mitigated slightly, and you can see the internal structures forming in the H1 very clearly. So this is the H1 is swing is bullish. This is a strong swing low, weak swing high, and the internal structure is being making pullback towards the discount, and then we can expect the price to push up. Or since the daily is also swing, the daily structure is reached its premium prices, so we can expect the price to come down and to facilitate the high time frame run phase, which is the daily. So here, this is the high boss down, bearish high boss, and this is the current internal ridge that I'm dealing with. So this is a strong internal high, weak internal low, and here is the POI, and here is the inducement. So this could also be an POI. So actually, I took trade from this POI. This could also be a POI, but only I can take trades from this POI if the price makes if the H1 chalk bearish. Otherwise, I'll be waiting for the price to mitigate this POI to take shots. Yeah, aggressive move would be to take M15 LC2A or LC2A models directly without H1 chalk bearish, but I'm not interested in those. Uh, I'm in a deep drawdown, so even if the price, I can take trades from this POI also, but provided it should have H1 chalk bearish. Yeah, price mitigated this POI. It didn't tap into this POI, nor it didn't take out this inducement. It just mitigated this POI. Why I'm sure this candle is low probability because this is a new candle and probably the highs would have a ton of liquidity above. So after mitigating this POI, it made a chalk bearish. So chalk bearish in H1 time frame, which means that okay, maybe the supply has stepped into the market. So now it is a prime time to look for the M15 LC1 models, or I can also enter with H1 risk entry, but I'm okay to look for M15 LC1 models. So this is the first liquidity, I mean the M15 lid that I was able to spot. So I was waiting for the price to take out this liquidity and then push down. But unfortunately, it was almost 9:55, which is almost the end of the London session. So if I look for LC1 models here, that would I'll be trading during the London lull. So that is not the period where the LC models typically play out. So I just marked, so it is around 10:7. I just marked all the, you know, mechanical rules and I just left the risk. So it's a phase C trade and it is in non-OTE. Yeah, it is a non-OTE. Actually, it is an OTE point. So you can see this is the 33%. This is 50% of the range. Price has already moved to the discount prices of 50% of the range. So now we can there's a possibility that price can even push up to take out this strong internal high. So it's possible. So this box is unchecked. high time frame narrative support in the medium time frame area. Yeah, we saw that because price can come down to fill the fair value gaps. So it's possible. So medium time frame POI as 4 out of 8 criteria met. Yeah. Uh, these are the criteria of the medium time frame POI. So it has swept the CHNI liquidity. It has displacement. You can see the fair value gap is almost being formed. Made shift in the order flow. Fractal. Yeah. Anything. But that is valid, right? Or it is unmitigated. Yeah, it's unmitigated as an inducement and it is formed during the kill zones. So if the price has tapped into this H1 supply, so I would have marked the PO criteria for this H1 supply. So if this comes into picture, then this box would have been ticked, and even this box would have been ticked, and that would have been a very high probability POI for me. And the entry method would be LC1 using M15 late, but actually I entered using M15 confirmation entry. So the risk factors are executing the trade during London lull. H4 supply is not being mitigated. So price can push up to take out this inducement and tap into this H1 supply before pushing down. So these are the two risk factors. And yeah, one more risk factor is obviously price has already reached the discount prices. So yeah, price can push up, take out the strong internal high and start the run to external base. So at 10:10 GMT1, before leaving for my short break, I decided not to trade during the London lull because uh, trading during the London lull and with the LC1 models have yield low results as well as there is a POI above. So it is just in the H1 chalk bearish, but I didn't get a confirmation from the lower time frames. So what I just did is to solve these two problems, I'll just wait for the M15 confirmation entry. So M15 would at least take 7 to 8 candles to form, the confirmation entry pattern. So once that is formed, that would automatically be New York open. So obviously, if I get confirmation from the lower time frame, which means that higher time frames and the lower time frames are aligned with each other. So definitely that would be a very high probability case. And yeah, the drawdown is that, sorry, the drawback is that uh, when the M15 makes a confirmation entry, I would be expecting the price to pull back to the 61.8% of the fib level. It may not happen, and the price may go without me. So chances are that. So well, I had only two things in my mind: either I'll be getting profits or there will be no trades today. But expectations should not always lead to reality. This was the LC1 entry. I could have entered here, but it was London level, so I didn't enter. And this was the confirmation entry. Price pulled back and then pushed down. So I was confirmed that the price is going to go down. So marked from year to year 61.8, and then this is the 61.8 level. Place my sell limit order here, and I was shocked that the price actually tagged me in. Okay, I was expecting fine. The price can push down and give me a nice 2.5 hour, but actually this happened. Price just went up, took out the buy sell liquidity above my H1 POI, and then start to go down. I don't know whether it will go down to make another, you know, a breakout structure on the downside in M15, or it will push up to tap and take out some inducements here. We saw that there was inducement here, right? To take out some inducement here and mitigate this H1 supply and then push down. So we don't know. So that's the story for on Monday. That's the next day. For now, what I know is I took a loss and it's a valid loss because my rules played out. And yeah, I didn't hesitate to take a trade because it's a valid trade as per my rules. So that's it, guys. So let's see. Let's jump into GU and see what GU got for me. Let's jump into the GU. And in GU, I didn't get any trades. So the price action of GU was similar to that of the EU, but in GU, I had more high probability conditions than that of the GU. So let me jump into the charts directly. This is the daily chart, and the swing structure is bullish. The internal structure is not yet formed. So this is the daily swing low, which is strong, and this is the internal high, which is weak, and this is the internal low, which is strong. So here you can see a ton of low resistance being formed, and the price tapped into the daily demand. So, but still the supply is in control. But it's I must keep in mind that this is a low resistance liquidity in time that the price can push up to take out all this low resistance liquidity and then continue to take out this weak internal high. But for now, the supply is in control, and you can expect the price to make this choppier move down and also take out the strong internal low. Yeah, the price action is very clear in the 4-hour time frame. The swing structure is bullish, and the internal structure is actually bearish. So this is a strong internal high, this is a weak internal low that I'm dealing with, and prices already has actually liquidated the lows. You can see liquidated the lows. I actually considered this as small internal low yesterday, but now it just liquidated that small internal low and it started to push up. So This could be the early signs that this daily demand is going to hold, and the strong internal high could be taken out, and we can expect that daily low resistance liquidity could be taken out also. So currently, I'm just not overthinking. Like I'm just looking to follow the 4-hour internal structure. So this could be the 4-hour supply from which the price can come down at least to this 4-hour demand. So if the price mitigates here, I'll be looking for H1 to chalk bearish, and I'll be looking to enter from the fresh POI. And one more thing is that this supply is the only supply within this internal structure. If this supply has been flipped, then it is obvious that the price is going to take the strong internal high because all these are low resistance liquidity, and this is the only supply which can hold the price from not taking out the strong internal high. So this is even if I take a loss here, that would be a valid loss because I am trading from a strong supply, which is actually holding the strong internal high. So if I jump into the H1 chart, H1 is actually the string structure is bearish and the internal structure is bullish. So what I'm trying to play is the phase B shots, and yeah, price actually I don't know, but maybe the price has reached the equilibrium. So this makes phase B a bit of medium probability. So what I need is I just need the price to mitigate this H4 POI, chalk bearish, fresh POI, and then take shots. Very simple. And yeah, same. If this POI fails, then all these are low resistance liquidity which can be taken, and obviously the H1 swing high would be taken out. So that's what the expectation is. So session update at 7:47, the price mitigated the H4 POI. Now this is the H1 to the fractal low. So once the price makes a chalk, then fresh POI and then shorts. As expected, price made a chalk bearish. I didn't hesitate to mark the full POI because I just don't want to miss out this beautiful opportunity because everything is lined up. Price tapped into the high time frame supply and it has chalk bearish and it has KSNI and ton of imbalances to be filled here. Definitely the price will be magnetized towards them, and also I'm getting ton of confluences here also. So I just don't want to miss this move, so I just mark the entire POI. The entire out of flow. So here you go. PSP conditions. Yeah, yeah, actually price has reached the equilibrium of the swing structure. So that's why it is in OTE and there is a medium time frame shock and there is no SMT divergence. So if there was an SMT divergence, this would have been a high probability case. But there is no SMT and PY with 4 out of 8 criteria met. So at this time I consider this uh, I consider this 4 hour PY. So what are the risk factors? Price didn't tap into the H1 supply, so this is one of the risk factors, but not an issue. Price is already tapped into the 4-hour supply, so this is actually a pivot of the H1 supply. The actual H1 supply would be from this sell candle to this buy candle. So this would be the H1 order flow. I just marked the pivot, but still, technically, the price has tapped into the H1 supply also. This is not kind of risk factors that makes me to avoid the trade. So I just took the trade. Entry method with clear LC1 using M15 lead. So since I marked this entire out of flow, I just want to see one small M15 lead to take the shots. Yeah, beautiful. It has set up beautifully. You can see here this is M15 lead, and here you can see the M15 POI also. So if the price taps into here, I can look for two shots. So beautiful, beautiful high probability setup. Everything is high catching for me. I just want the price to take out the M15 lead. That's all I want. But unfortunately, price didn't pull back. It kept going down and down and down, and it has mitigated this fair value gap and showed strong reaction of it. So I was being slightly skeptical whether to take this trade or not now. Yeah, it has also taken the Asian lows and showed some kind of resistance with the bullish fair value gap. But anyway, I'm just sticking with that M15 LC1 and I'm just going to play the shorts. But unfortunately, this was around 238, so only 3 to 4 candles left. I definitely know that the price is not going to reach this M15 lid before coming down. So even if the price goes with the two big candles, the stop loss required would be very large, and then I would not get the required risk to reward. So this is what it is. In EU, there was some risk factors, but I got an entry. But in GU, high probability conditions, but I didn't get any entry. so leaving the rest without any trades. But I just came to the next day, that is on weekend. I just saw whether this trade played out or not. Actually, it didn't play out. This is the LC one. If I kept my trade right here, then I would have been tagged in, and immediately I would have been tagged out. So I didn't place the trade because it was out of the session. So it is what it is. Sometimes it plays out, sometimes it doesn't. So this time it doesn't play out. It was just, it swept liquidity on both the sides. So if the players who thought this was a demand zone, those liquidity has been swept, and players who thought this was a supply, and those liquidity has been also swept. So it's fine to take. So it's fine, as I already mentioned, to take valid losses from these POIs is fine. If I take a loss, I would be satisfied with, okay, I take a valid loss because it was a perfect example of my trading strategy. Anyway, it didn't play out. It's kind of a medium probability, as I already told you, but it is in the higher end of medium probability. Just the S&P divergence didn't play out, but apart from this, all the conditions are satisfied. Okay, that's it from JU. So let's see what XIU had for me on Friday. Thank you. Yes, let's start the analysis of XIU. So in XIU also, I didn't get any trades today. There was almost I got a trade, but price didn't react as per my expectations, so I didn't get any trades today. So let's see what did the goal has for us. Okay, this is the daily swing breakout structure on the upside. So this is a daily strong low, and this is a daily weak swing high. So price actually respected this daily demand. I mean, price actually made an high boss up and came down, respected this daily demand and gave us a strong push. So this would be a strong indication that the price can continue with this order flow and then take out this weak swing high. And there is also some equal highs formed here. So price would be obvious to take out these equal highs also while taking out the weak swing high. So here is the 4-hour chart. The 4-hour is swing bearish. This is a strong swing low. This is the weak swing high. And the internal structure is kind of consolidating because you can see the price was initially bullish. The internal structure was bullish and then it shifted to bearish to facilitate the swing pullback. Yes, once the swing pullback was over, it then shifted bullish. And what was my expectation? Price to continue that and then take out the weak swing high. But again, the price made another, internal structure, high boss on bearish high boss, and now the internal structure is currently bearish. And also within the internal structure, the price is actually consolidating between this, Tuesday's candle, I think so. Yeah, I think this Tuesday's news candle. So within this candle, the price was consolidating for the past few days, and now the price broke out. So this is the order flow. This is the buy to sell range from which the price broke out. So this is the point where the big institution has stepped into the market and pushed the price up above this resistance line. So if the price wants to, take out this weak swing high or, go deeper or take out this strong internal high, the price needs to respect this POI, gain some, pending buy orders, fill some pending buy orders, and then it can push up to take out this strong internal high. So that's a story for a different day. But what I can do now is I can play the sells down to this POI. That's what I did today. Actually, price made a bearish shock here. It's not very clear, but you can see this is a pullback and then price pushed up, same candle pushed down and then made a shock. So price is in the higher time frame supply and there is a higher time frame shock also. So I can look to play the sells up to this area of demand, and once it is reached, I can look to play the shorts. So here it's the lower time frame. So in lower time frame, it's clearly visible. So this was a bearish divergence which formed yesterday. So just ignore this one. So string structure is bullish and the internal structure is bearish. So it's very clear in H1, and this is the failed POI. So I need to delete all those things. Yeah, now it's clear. This is the internal structure that I'm dealing with. So this is the H1 POI from which was inside the H4 POI, and price actually made a bearish chalk here, and now the order flow is continuing. So I can't just directly jump into this POI and then expect the price to come down. So what I'll expect is either to price to respect this POI, push down, and push down. This will indicate that okay, still the supply is in control, and I can look to follow this bearish leg up to this 4-hour demand. Or the other advanced option would be price to move up, make a chalk bullish. This would be a liquidity sweep, and then again the price to chalk bearish. This would be very high probability because price has taken some buy side liquidity during the session and formed a POI. If I get, I would not be, I would be tempted to enter, H1 risk and risk with these POIs because they swept some buy side liquidity and they're now pushing down. So that would be the manipulation of the day, and then the distribution would be on the downside. So just follow the distribution, right? That's what I was actually waiting for. So actually, the price made a chalk bullish, and now all I wanted is price to make a chalk bearish. But actually, price kept moving up, so so you can say that I could have followed this bullish order flow, but price is in the higher time frame supply. So anytime that the price can reverse and take out my stops, so I just don't want to get into longs sooner. But shorts are very high probability because there is no demand here, and actually price the supply is supporting our shorts. So that's why I didn't take any trades. So actually, this was around 12:25 when the price was almost fill, middle of was almost in the middle of the H1 supply. So I expected the New York to push the price down, make stock bearish, and then the fresh POI I can enter the risk entry. But I'll show you what happened. Price after these are the three candles of the New York session. All of them was just consolidating and it just didn't get any trades. So it is what it is. Just moving out of the desk. Maybe tomorrow I can, or Monday I can get some, chalk bearish, and the price would be around here. You can look to enter shorts up to this 4-hour demand. And once the price enter the 4-hour demand, again I'll be looking for H1 to chalk bearish and longs, which would make sense. So let's just quickly jump into the charts and see what the gold chart has done. It's still consolidating, guys. It has made a chalk bearish, but uh, again it made a bullish chalk. There is nothing to do with this. Even if there's a chalk bearish, the same candle made chalk bullish. So there is nothing to do with this POI. I mean with this chalk bearish. So what I can do is like I can wait for this chalk bearish to be taken out during on Monday, and then that would be very high probability for looking to play the pullback trade up to this 4-hour demand. That's a different story. Okay, that's it from XAU, and that's it from today's session. So the today's session has just yielded only one loss, and that loss came from EU. So that's it, guys. See you on day 76. Cheers. Bye.